day all. Ira Epstein of Linn Associates with your agriculture wrap-up, and this is for Monday, the crashing day of March 9th, 2020, and we're just getting on into the 1:45 time frame. I'm going to be an hour from now at 2:45 with Liz Clayman on the market close because the stock market is down so much, and I know she asked for me to be on there, so I'll be on there probably about 15 minutes as they wrap everything up. All right, as you can see, you've got a market that's in a state of panic as oil prices have collapsed. These are not misquotes. You're down to 30.86 in the crude, 33.88 in the Brent. That has pushed the grains down in mass, and the reason is people sell whatever they have to sell in times of either meeting margin calls, in times of they're so fearful they just get out of markets. It's typically not they're running in the buy. People are generally by nature more long than they are short. Pros are often equally balanced, but it's different the other way. And as you could see, the beans are breaking through key areas. They're down to the 870 zone, even though China did up its amount of imports from the United States, even though Argentina is going on a 4-day strike in soybeans, and they're going to have to use shipments up at the different ports. Doesn't matter in this type of environment. And if the stock market keeps dropping, you get even more panic. Now, we hit circuit breakers in the stock market last night, 5%, they stopped trading. Then the market reopens to get to a 7% circuit breaker. If that happens, 15 minutes of ceasing trading during the day. Now you've gotten back down under that, and you're finding a little bit of a bounce in the market from there. We'll see what the end of the day offers. But when we take a look at the weekly chart of closes of beans, you've rolled under this important number. Whether it's fundamentally based or not, immaterial. It's money based, and we know what's going on. World economies are fearful of a recession all of a sudden. When we look at a daily bar chart, you're gapping underneath everything. So this was the old support zone. The 880, we had talked about that. Now you went through it. So now you've got what's called a money panic of types going on. There is a gap in the chart. If the market rallies, I'd look for the pros to be sellers into that gap. You've come straight down now, as you can see, from the 912.5 area all the way down to today's low of 867 without much of a bounce. So now we've expanded at a bare minimum the trade top, and now we're looking for another trade bottom. Are we trending? No. You're plunging. There's a different word. The reason it's not a trend is you're not making a pattern of lower highs, lower lows. You've whipped around making a lower low right here than that one, shot up, and just as fast coming right back down. When we look at key moving averages, the 18-day average of closes is here. You spent a little bit of time over it, challenged it, but I think if you went home on Friday on a daily chart, you weren't looking to take that number out. You had no big numbers or anything. This is, again, part and parcel of what's going on in the financial markets right now. As for under the lower Bollinger Band, you better believe it. Market's under it. Now, it's the first day under it. If it stays under it again tomorrow, a lot of traders are going to think this is a breakout to the downside. So we have to keep our eye on what this market does there. In terms of momentum, you are now with one of the numbers closed under 30. So at least we have an oversold condition under the lower Bollinger Band, certainly whipsawing back and forth. And my old theme that the first time you hit a band on the downside or the upside, I think the pros take money off the table. And that's exactly what occurred. And the neutral number, of course, is the 18-day average. It's like a pinball machine. It's the reset button when you hit it and everything comes live again. And when you got up to it here, that put this back in play. Then when the market got up to this top, I think you'd agree it absolutely stopped right at that number, played around it. I didn't see this coming. I don't think most people did. In the meal market, you've turned back to a downtrend. Why a downtrend? Unlike soybeans, you have lower highs, lower lows. The settlement at 300.4 is under the 18-day average of closes and momentum turning down. So as I see it, you're back into the downtrend. The 100-day average is suddenly looking like it might have been on that little bounce on last week on Friday, right here, a top area. I didn't see that coming either. In the soy oil, at least this one I've got my eye on. Lower highs and not able to get over the 18-day average of closes. Now again, a challenge today of the lower Bollinger Band, and I'll say what I've said before. The first challenge is where I think pros take some money off the table. Oversold market there. Doesn't mean you can't go lower. That's what I think they did today. In the corn market, this is the first retracement back to the lower Bollinger Band. You know I'm going to say it. That's where I think pros are taking money off the table. And no, there's no trend. You have a lower low and a higher high. You fought a battle that you failed at to stay over the 18-day average, and you plunged down. You didn't make a new low yet, but momentum's pointing down, bias down. We'll see if the market can make that lower low. The one market that stuck its head up off the lower Bollinger Band today was right here. Actually, it missed it by, missed it by a half a point. That to me is close enough. But it at least held. But it's an embedded reading, which means I expect good selling on rallies back into the 18 to the 100-day average of closes. In the sugar market, this is in a state of collapse right now. Just plain on coming down, don't know where it's going to finish, embedded reading under the 18-day average. The 100-day average is proving to be resistance. I teach not to sell under lower Bollinger Bands. I question how much people just panic in these markets. In the coffee, back to the 18-day average. It's one of the few gainers today in the futures markets. And I am talking, I should have said commodities markets. As a commodity, one of the few gainers. It's not in a trend. It's got a higher high, lower low. We'll see what the market can do with this. The first resistance should have been the 18-day average, and it is on the way up. It is not trending. Cattle market just sinking away. Embedded reading. Lower Bollinger Band. Today's low, 102.75. Market finished down just shy of limit down. Hog market failing at the 18-day average, stuck in this sideways action, if you will. Again, I question how much of this is just money not knowing what to do with itself. And I think people just going, I don't want to take risk right now. So you put that all together, you take a look at what these markets are doing and understand you are in a very, very volatile time. COVID-19, the virus, we're going to see the situation worsen. We're liable to see, as Florida did today, they are asking for self-quarantine of anyone coming into the state that's traveled to any foreign country. So this is another level that they're kicking. The president's called consuls to meet tomorrow at the White House. Look for the government to do some coordinated effort to bail out small companies, maybe people that have to stay home, force different things to soften the blow that this virus and combination now of the attack on our oil is taking place. And you know the U.S. will find it in its best interest in some manner to protect our oil supplies and not allow our businesses to go under. If you think different, you're going to see that that's not the case. That I'd bet on pretty big. So what do you do in this kind of market? Well, that's why we write all day long. We're trying to give you what's going on. And yes, today we did a lot of saying, keep your hands in your pocket. And if you get my market letter, you know I've been saying that for a week. And you'll say, well, you can't make money doing that. Well, you take on this risk. Most people are not this risk verse. They don't want to take on this kind of risk and these type of swings in the market. There's a time to play and a time to sit back. But does that mean that there isn't a time where you look at some of this as opportunity and depending what you want to strike in there? Well, that's why we write on all these markets. Give you an idea when we think that is coming, where you start looking. I know in our office so many people are just talking, where do you step into certain things? And we talk about that. I don't think the timing is right for that, but I think it's time to start thinking about it. We'll cover these in our letters. How do you get them? Go to our website under free offers in the bottom right, click it, or you can click right up here. If you're watching YouTube, we'll be out there. I'm Ira Epstein. You have a great day.